And Mark, we've had considerable developments of a geopolitical nature. We were just talking about the relationship there between India and China, and Russia comes into that. And then elsewhere, we've been focused very much on the White House and all of the meetings that have taken place there with regards to Ukraine. Does any of that cut through into markets? You know, some people are suggesting there's a little bit of upside maybe for Europe, but it seems too early to be really making that call. I wonder how, from a markets perspective, we watch the developments around Ukraine.
I think you've summed it up pretty well there, Anna. I think the fact is we have made a little bit more progress than was probably expected by most people in markets a week ago. There are signs that potentially a peace deal is available there, and I think that's got the market a little bit optimistic. As you say, it'll take some time, and there's still lots that can go wrong. So we've got a slightly higher level of optimism that's priced into market. You can see that European equities are doing particularly well this month compared to most other global markets. They're having outperforming on that basis, and I think that's kind of priced in from there. I think it's going to be hard for us to nudge further from there. I don't think in the short term it's the forward-looking dynamic unless those kind of talks get derailed, but definitely it has been a driver of the optimism in the last few days. What's interesting is it's not kind of spreading into global optimism. We seem to have kind of stagnated a little bit in global markets outside Europe.
Things are getting bleak when we start talking about the gilt market again. I hear you're interested in UK inflation.
Yeah, I'm not normally excited about UK inflation. Of course, UK data has been so undermined in recent years. We're always a bit suspicious of it. UK inflation's always way above target, but it's really very far above target and not getting any close to target. And of course, we've still got cuts priced in. And I know the economy is not doing great. But, you know, look, long-end gilt yields are really kind of getting quite a bit higher again. And I think this is in a backdrop that the global story is yields and the long end are rising everywhere again. We're seeing it in Chinese yields, which wasn't part of the dynamic before. We're seeing obviously in Japanese yields. US yields are only about 10 basis points higher than they were a week ago, but the point is they have bottomed. They are rising again this month. So I think we're seeing, you know, the word bond vigilantes gets used a bit too freely, and I'm probably going to make that same error here by saying we're seeing the slight creep of bond vigilantism creeping back into the market this month. And I'm worried, given Jackson Hole's coming up, that it might really accelerate. So I think bond yields are the next big catalyst for markets, and I see higher bond yields being a problem for global stocks over the weeks ahead.
Okay, and Jackson Hole, do you think that Jerome Powell is going to try hard to say very little, or will he have some other aim in mind, Mark?
I think he is going to try, you know, saying very little and trying to keep his options open. What that will essentially mean is maybe pushing back in the idea of validating a September cut. I don't think that the data warrants that yet, but he might want to have a September cut if the data we get in early September is really, really poor. So I think he's going to be slightly hawkish, but not overly so, which is going to leave the market a little bit disappointed.